summarize on what we actually saw in the WTI market over the last couple of days. Are we really going to expect such massive volatility as an ongoing occurrence going forward, or was it just kind of a one-off activity? Ehsan, Manjit, your thoughts first.
Hi, Rohan. Good morning. Hello, everyone. Good morning, good afternoon, depending on where you're joining us from. Thanks for logging into this webinar again. And Rohan, just to address your point, so I think it's not a one single kind of a viewpoint or an answer that would determine or provide an insight into what we witnessed in the last couple of days. And like you mentioned, it's historic. It's unprecedented. So we're running short of adjectives to describe what we witnessed in the last couple of days. But what is, I think, more important is to try and understand why it happened, what happened, and also some of the reasons that goes behind it. So to primarily start with, it is purely a U.S.-specific issue that resulted in the huge negative pricing that we witnessed a couple of days ago. And it is not that the global prices are in the negative territory, which is mostly reliant on the Brent pricing, which at that point in time a couple of days ago was still above the $20 per barrel mark. And I think now it is down to around 17 or 17.5 as we speak now. And so going back to the U.S. Specific issue that we were talking about, and this in specific is mainly because of the huge storage crunch that we are starting to witness, especially for the May contract that was in place at that point in time. And primarily also because the delivery point for WTI is Cushing, and Cushing has been announced that they have absolutely run out of every single storage tank that could be let out or that could be given out for any kind of storage that could be used for. And the other reason is more on the financial side, which means most of or some of the investors who had potentially bought the contract initially thinking it's available for a very cheap price would have eventually been faced with a situation where they would have either had to sell out of it in order to buy the next contract, or to take a decision where they had to avoid taking delivery of the oil, because WTI is is usually settled with physical delivery, unlike Brent. And the infrastructure constraint, like we mentioned before, is one of the more pronounced reasons why, or rather one of the major driving forces that led to this massive shift in the market that we saw for a few days back as well. And the other side of it is also constitutes because of this whole COVID-19 situation that we are facing right now, which has eventually resulted in a huge demand destruction. There are U.S., from what we understand, has still not seen the peak of the whole cases that has been reported, and that has resulted in several major U.S. cities going into a travel ban or a huge consumption loss, both in terms of the refineries and the consumer demand that are expected in the market. And also what we need to understand is that this demand that we have seen being lost, or that demand that has reduced, is not going to jump back into what we were seeing before a pre-COVID situation whenever the economy starts to recover slowly. People are still going to be skeptical for the travel arrangements, and it's not people are going to be trying to compensate for the lost travel or for the lost holidays the moment it starts coming back, or the business travel as such. It's going to be more measured. It's going to be more in the strategic in terms of how businesses conduct themselves, and also for people who have unfortunately lost their jobs during this situation. It's not going to be an easy way back into the economy or easy way back into the job market. And that is going to be an elongated and a much more longer cycle before we can see demand resuming to levels what we were used to prior to this whole destruction that we saw happening. The next is actually looking at the forward curve in terms of the prices, which is usually a good indication of where things stand in the market. And if we look at the forward curve right now, it takes at least 4 to 5 months before it even starts to level off in terms of the pricing. And that is basically an indication that the storage is not expected to be made available at least until that point in time. And it is only after there is some kind of an indication for demand to start increasing after a few months that we can see the inventories that are kept in storage to start coming down, and which can thereafter be allocated for the new oil the new oil that is being produced or that is being imported into the country. So on the whole, this is purely an infrastructure-related issue. And talking about storage in Cushing, we can see how the volume has shifted just in the last few weeks, not even months. I think when we did the assessment in mid-March, the actual utilization of Cushing storage levels was just about 55%. And just in a span of a month, by mid-April, the inventory levels are expected to be somewhere in the range of about 70%. And this, of course, we saw a record inventory build of 19 million barrels that was reported a couple of weeks ago. And this week, for the last week, it is estimated that the inventory is again going to build by a whopping 13 million barrels, although the official numbers are expected to come out later today. And that is eventually going to be creating the crunch. And I think as per the estimate, with the way the inventories are building up, the expectation is that it's in a matter of 2 to 3 weeks, the inventory is going to build up to 85%. And we all know that the official estimate for Cushing storage is somewhere in the range of 75, 76 million barrels. And keeping some other level of safe limits, we are going to be reaching to the brim very, very soon, if not later. I guess maybe Ehsan could add a little bit more. Yeah.
Hello, everybody. Just 2 points, 2 questions which are being asked at present. The first question is what would happen to the June contract when it expires in the 3rd week of May? Because storages are being filled and as far as Cushing is concerned, total storage is around 78 million barrels, and we already have more than 55, 60 million barrels at present. So, and they are increasing at a rate of around 5 million barrels every week. So storage will be filled soon. So as a result, there will be even more pressure because of logistics, as Ranjit pointed out. As a result, it could happen. Yes, it could be repeated when the June contract expires. And the next question is whether it can happen to Brent. So Brent is cash settled compared to WTI, where you can get physical delivery. As a result, probably it cannot happen with Brent. On the other hand, we also have seen some even seaborne crudes being sold at negative prices, so some Latin American prices being sold at negative prices. Also WTI being offered at a $7-8 discount to WTI. So as a result, it's uncharted territory, but I think Brent will not have such a fate, and I think we will continue to see positive prices.